And what is up guys, Andrew here, and today I'm bringing you guys a video on the top 3 stocks that I think are on sale right now. If you're new to this channel, welcome. I make stock, cryptocurrency, investing, personal finance, and all sorts of videos. So if that sounds good to you, please be sure to subscribe and hit the bell. So the first stock that we're going to be looking at today is stock ticker QSR, or Restaurant Brands International. They own Tim Hortons, Burger King, and Popeyes chains. So let's take a look at the chart here. This is a one-day chart for QSR. You can see that So let's take a look at the one-day chart here for QSR. We can see that we're in a huge downward wedge position here, and these do have a bias to the upside. So hopefully within a month, we'll see some popping to the upside here. And if you take a look at their RSI as well, we are decently oversold, but not as oversold as we could be. This is also in a downward wedge position, appears. Let's also take a look at some of their financial numbers here. Their PE ratio of 21.56 is better than average for the restaurant industry, and they are growing their earnings still quite well. Lastly, with a 1.92% dividend bonus and all these bullish analyst price targets, QSR seems to be a good buy right now. Alright, so the second stock we'll be taking a look at today is JetBlue, or JBLU. And taking a look at the one-day chart here, we can see that they've been in a huge consolidation phase now since the start of 2016. And we are decently oversold on the RSI. It looks like we could be trending back up now. Today was a good day at a 1.33% gain. And we're going to take a look at some of their numbers. I like JetBlue because of how cheap they are, with a PE ratio of 11.31 and a forward PE of 8.8 here. That's really good stuff. On price to earnings, price to sales looks really good too. So two things that do bother me though is this negative EPS, and also the fact that they don't have a dividend. Compared to, let's say, Delta, who also has a cheap PE and forward PE ratio, JetBlue is a riskier stock. The only reason it is on my list today instead of Delta is because I think it is more on sale relatively than Delta. But Delta is another really strong, cheap airline stock too that you could look at if you want. And while JetBlue could trade sideways for a little bit more, this definitely isn't a bad entry point, I would say, given how well they've been And while JetBlue could trade sideways for a little bit more, this definitely isn't a terrible entry point, I would say, given how well they've been obeying this upward trending support line. And the last stock that we'll be talking about today is YY, which I did previously make a video on, so go check that out. They're basically the Twitch of China, and we can see that after a very strong run in 2017, they've been in a huge downward wedge right now. It appears that we are quickly approaching the apex of the triangle very soon. I wouldn't say this is the bottom yet. It could go to maybe around the $86, $87 mark. But usually these huge downward wedges do break out to the upside. The bias is in the upside, so that is a positive note. Also on the RSI, we are very oversold here. And this is also in a downward wedge, so look for a breakout on the RSI as well. And lastly, YY, with the huge drop since its all-time high, is looking very attractive on the PE and forward PE ratios. They do bring in good growth. Their earnings per sale is up huge this year and next year. And Wall Street still maintains an extremely bullish sentiment on it with a target price of 154. So that is going to do it for me today, guys. Thank you guys so much for watching. If you haven't already, please be sure to drop a like and subscribe. Really helps me out. And I'll see you all in the next video.